Good morning. You're watching Businessworld Live. I'm Danny Laurel. It's 9:30 a.m. this Monday morning here in Metro Manila. Let's go straight to our top story. Economists expect inflation to rise in the month of August. That's as Metro Manila and nearby areas were reverted to a modified enhanced community quarantine for 2 weeks. A Businessworld poll of 16 economists yielded a median estimate of 2.8%. That is well within the target 2.5% to 3.3% range given by the Bangko Sentral. If realized, the median estimate will be slightly faster than the 2.7% rate in July and 1% recorded in August of last year. So far, inflation averaged 2.5% in the first 7 months, and the Bangko Sentral expects inflation to average 2.6% this year. Continuum Economics' Jesse Liu says the uptick in prices was mainly driven by food and market costs. Union Bank Chief Economist Carlo Asuncion said the return of the MECQ in the first 2 weeks of the month likely contributed to higher commodity prices. The PSA will report the August inflation data on Friday, that is September 4th. Now, on the back of this inflation expectation, let's open the Bloomberg terminal together as we take a quick peek at how our local currency is doing, strengthening as of August 28th. So that is on Friday. Markets are closed here in the Philippines today. That's at 48.507 to the greenback. Now, this according to Union Bank's Carlo Asuncion, he sees that the peso will be likely to strengthen even further against the greenback, especially this week. That's on the back of expectations of the slow inflation we had just reported, and also on the second economic stimulus bill, which is awaiting the signature of President Rodrigo Duterte. You can take a look at your screens here. 1 month peso had already strengthened, even week-on-week basis, still continuing to strengthen. We had hit the strongest that we've seen in 4 years. And another range that Carlos Asuncion is looking at is that we might be moving even stronger to 48.40 versus the dollar. He sees a high demand for the peso as inflation remains manageable. However, he is warning that expectations of higher unemployment may put some downward pressure on the local currency. Now, recall that on Friday, the peso had climbed. That was on the back of hints from the United States Federal Reserve that it will keep borrowing costs low that this year, at least for 2020, to push inflation up towards in the US towards the 2% level. Now, you've got Mike Ricafort of RCBC saying that this push had led declines in the government bonds, thereby partly leading to a weaker US dollar. Now, as you know, when the dollar weakens, the peso, of course, strengthens. He said that because of the reduced interest rates, record interest rates over in the US, the allure of the dollar is still very low. Meanwhile, we've got Central Bank Governor Ben DIOKNO here saying that he sees an uneven recovery. This as he believes that there will be a different type of recovery in different countries. He says it's in the interest of different nations to have a coordinated solution to the crisis when he was asked to comment on the shift in U.S. monetary policy. But he did say that while there are common themes, of course, a lot of easing going on across different central banks globally, the harsh reality is that the ability of the governments to minimize the negative impact of the pandemic will be uneven. So he did admit that there will be a differing strength in terms of the recovery. He also mentioned it might be too soon to think of an economic recovery until the pandemic is effectively managed. You can see on my screens here how our GDP had slumped by 16.5% in the second quarter. He reiterated that monetary policy, recall that he had mentioned earlier last week that we might be seeing the last of the easing or the rate cuts, at least for the benchmark for this year. He said it is not only the only game in town when he refers to monetary policy. He said that policymakers should be looking beyond the crisis and thinking of how to not permanently scar our fiscal body, and also how to not unduly burden future generations with our massive debts. Now, what debts is he talking about? Recall that the Philippines is now considering issuing debt that pays interest based on our GDP. So GDP-linked securities. They had also announced that the Bangko Sentral has more than doubled its green bond placement. That's around $200 million in green bonds this year. Plus, the Philippines aiming to raise 20 billion pesos from treasury bills. Okay, guys, it's National Heroes Day today, August 31st. So we do honor not just our fallen heroes of the past who fought for sovereignty and democracy, but also our modern day heroes, the OFWs, the frontliners, the homeschooling mothers, and of course, our healthcare workers. So this broadcast is for you. Markets are taking a pause here in the country, but they are open elsewhere. Let's take a quick peek at how Wall Street had performed on Friday. You can see on my terminal here, all three benchmark indices in the green. You've got the Dow Jones up by 0.6%, the S&P 500 up by 0.7%, and the Nasdaq as well. The S&P in particular closing at an all-time high for a 6th straight consecutive trading session yesterday. The Nasdaq Composite also reaching a record, this amid the dollar steadying to a two-year low against major peers, and treasuries rising as well on Friday. Gold, however, still rising. That was the most in almost 2 weeks. So the investors are still very iffy here. They're weighing the impact of the Fed's new approach to setting U.S. monetary policy. Nevertheless, if you take a quick peek at Asia Pacific and how the open markets are trading, you can see a lot of euphoria here following those record highs over in Wall Street. In particular, you've got Japan surging by 1.8% for the Topix and Nikkei 225 as well, closing in on 2% gains. Bloomberg says that this rally suggests that, you know, that rally that lifted equities to fresh high last week and in the weeks prior still has legs. Now, you've got Chinese manufacturing data coming in today, and you could actually see the Shanghai Composite and the Shenzhen enjoying some early gains here. The Hang Seng up by 1.2% as well as of 9:25 earlier on this morning. Now, the Chinese manufacturing data is going to be showing a lot on how the second largest economy in the world is emerging, but you've also got China's biggest bank suffering the worst profit decline in more than a decade. That had been announced over in the weekend. Meanwhile, there's still a lot of tensions going on between the US and China. In another development, you've got the Chinese government that will now be required to seek approval to sell the US operations of TikTok. There's new restrictions imposed on Beijing. Now, in Japan, you've also got the race to replace Prime Minister Shinzo Abe. He, of course, mentioned he was going to be stepping down for health reasons. The yen had pared some of Friday's gains as Japan is now looking for a new prime minister. Meanwhile, when you talk about the COVID infections, we are still on the back foot. It's still a negative picture there. COVID-19 infections surpassing 25 million worldwide, deaths now exceeding 843,000. Meanwhile, global equities have still been rallying as economies have started to emerge still. You've got, record cases still in India, for instance, biggest daily spike. You've got New York State reporting a surge of infections. You've got the UK adding the most cases since early June, and also, a lot of cases over in California. So worst is definitely not yet over. Now let's move on over to our local boards. Again, trading is closed this Monday, but we just want to take a quick peek at how we had performed last week. We had declined for a second straight month in the month of August. This after having already rallied since the depth of March 19. So we continued declining in August, but at least the pace of the drop was much slower than the previous months. I'm going to pull out the year-to-date chart for you guys so that you can see how we had been trading sideways. We had dropped significantly over in the month of July and June, but we are actually paring back those losses yet again. So on Friday, we shed 0.6%, still well below the 6,000 psychological level. On a monthly basis for August, we were down by 0.8%. However, this is actually pleasantly surprising performance. This is according to TradeAsia.com. Here saying that usually August is so-called ghost month, and that is dry trading month. And we actually still perform better than we did in July. What is going on here? He said that last week, profit taking dominated the week ahead of this week, which will actually be very data heavy. There's going to be inflation data out, as we had just reported, and this might inform the decision of the government on whether to extend or ease the current quarantine restrictions in Metro Manila. So he said the traders had been positioning over on the back of that. Now, recall that value turnover went up 71%, an average of 9 billion pesos last week. That's actually much higher than usual. even as net foreign selling was extending and grew more to double. Now you can see on my screen here that our net foreign selling on Friday was more than 1.6 billion pesos. That's on the back of 9 consecutive trading days of net foreign selling. Last week, we felt pain of about 3.2 billion pesos leaving our local bourse from the foreigners selling out. And this brings our August to the 10th straight month of a foreign outflow. Now, I did want to take a quick peek at how our sectors performed as of Friday's trade. You can see on my terminal here a rather mixed picture. It's actually closed right now, but we can see here how it was a very mixed picture. You've also got different companies, actually very mixed bag here on who were the best and worst performers of the week. A lot of conglomerates actually when you take a look at the best performers, but you've also got the usual bright spots here. For instance, the telecommunications company. So you can see on my terminal here, PLDT still the best performer last week, up by more than 8%. Pure Gold, which a lot of analysts had said the second quarter earnings had surprised them on the upside, up by 5 9/10%. And a very mixed bag in terms of the rest of the best performers. Now, if you look at the worst performing ones, two clearly stand out, and those are the property players. Actually, three property players here. You've got Ayala Land down by 8% in just 1 week. SM Prime as well, feeling the pain of 5 8/10% sell-off, and also Mega World down by 5 2/10%. Another one to be watching out for here is Jollibee. Those shares fell by more than 3% last week and down by 2.6% on Friday's close. And this, according to AB Capital Securities' Lexter Azurin, he says that Jollibee's financial health could be worse than expected. There are reports of job cuts at its headquarters. He is seeing a Jollibee to test 125 peso level. Recall that on August 5th, Jollibee said it would shut 416 stores and some supply chain facilities this year. Okay, let's check in on the biggest headlines we are watching this Monday morning. Let me just scroll down to that. You've got the policymakers who are not that keen on lowering value-added tax on internet services, saying it will do little to improve the overall internet infrastructure and quality in the country. A survey released by the research arm of IT firm Surfshark showed the Philippines as having one of the worst internet affordability and quality in the world. With this, the group said the country should address factors that directly influence affordability of internet services. However, Ways and Means Committee Chairman Joey Salceda said reducing VAT on internet services would provide a, quote, immediate but fleeting price reduction. Salceda said such a move could mean lost revenue for digital infrastructure, which could further mess up the country's internet services. Salceda is instead proposing to relax the use of satellites for internet connectivity. The DICT, on the other hand, said lowering VAT on internet services would not have a significant impact. Former DICT's Undersecretary Eliseo Rio likewise said there is no need for the move since telcos can directly invest in infrastructure development. Senate President Pro Tempore Ralph Recto has the same sentiment, saying it's a no-brainer that the government needs to focus on the pandemic these days. Meanwhile, the proposal to cut corporate income tax is expected to generate jobs and reduce poverty by nearly 5%. This is according to a study commissioned by the Labor Department. The study was based on the Sitira bill, which has now been repackaged as CREATE. The measure seeks to lower corporate income tax to 25%, down to as much as 20% by 2027. That's alongside rationalizing fiscal incentives. Labor Secretary Silvestro Bello said the proposed law would create over 1 million jobs in the next decade. The study indicated that if savings from a lower corporate tax rate of 20% would be reinvested in the country, it could generate up to 1 trillion pesos worth of new investments by 2029. As much as 2.3 million jobs are also expected to be produced by 2029. That's according to a study. Union Bank Chief Economist Carlos Untitled, however, called for caution since the study had been done before the pandemic. He said the original simulation results may now look different given the serious blows the economy has taken due to COVID-19. Still, he said the measure has a positive impact and is an essential part of the road to economic recovery. The Anti-Red Tape Authority said they are set to launch a central portal next month, streamlining the registration process of businesses. The central portal aims to eliminate red tape and curb corruption by reducing the processing time for business registration from over a month last year to just a week. Now, to do this, ARTA is also reducing the steps for business registration to only 8 steps from the previous 13. The online platform captures data on business transactions and provides links to online registration services of national government agencies and LGUs. The project also consolidates business registration requirements of government agencies like the SEC and BIR, as well as SSS, PhilHealth, and Pag-ibig. The system, which underwent a closed beta testing last week, was developed by the DICT. ARTA, though, will be the one in charge of the system's implementation that's under the Ease of Doing Business law. An economic crisis can spell pain for most companies, but can also become a catalyst for consolidation and synergies. Here to share with us the outlook on mergers and acquisitions here in the Philippines, we have with us Mary Jade ROXAS-DIVINAGRACIA, Managing Partner for Deals and Corporate Finance over at PricewaterhouseCoopers. Good morning, ma'am, and welcome to the broadcast.
Hi, good morning, Danny, and thank you for having me here.
Ma'am, I love this topic. It's something that, we are unable to focus on right now whenever we're looking at just the stock movements of markets. It's great to be taking a step back and seeing the bigger picture here. Give us a general state of M&A during a pandemic when people have, a lot of cash flowing out and it's a really good economy. M&As are likely to boom. But right now, is there enough liquidity? Are companies not just holding on to cash? You can see capex being cut across the board. What is going on right now? Is it a bigger buyer's market?
Yeah, I think we've talked about the pandemic for the last 8 months now, and it has certainly disrupted markets and economies worldwide. And the deal making was no exception. During the early months of the year, sometime around March and April, we've actually seen deals being delayed because of the uncertainties brought about by the pandemic. And one of the transactions that we're working on even got canceled because the buyer felt that there's just so much uncertainty that the pandemic is bringing into the deal. And that was around March and April when we were all just simply taken aback by the situation and just grappling with what we want to do. But when the economies reopened sometime around June, we've seen a comeback in the deal flow. And judging from the number of due diligence work that we're doing, I think there's reason to be optimistic. The deal mandates that were hanging or pending at the start of the year got signed, and on the screen here, if we look at the deal value and deal volume for the first half of 2020, the figures indeed look encouraging. At least for the Philippines, first half 2020 deal value of announced transactions did not decline much compared to the same period last year. And in terms of the number of announced deals, we counted 15, which is actually better than 8 during the same period last year. So we really see this as a good sign that there is still appetite to enter into M&A transactions. Certainly, the uncertainties are dampening appetite to invest and to spend. And as you've mentioned, some companies are simply just hoarding cash. But I think with or without COVID, the same rationale for M&A would still continue to drive transactions. But the pandemic has certainly magnified some of these, no? So given the lockdowns, majority of the companies are expecting a significant decline in their operations. At the start of the year, many of these companies were actually projecting growth of 20 to 25%. And now they find themselves 30, 40, maybe even 50% below last year's numbers. So if they are looking for growth, inorganic growth that is, acquiring a competitor or another player in a different market may provide that answer. Also, the pandemic has exposed the vulnerabilities of a lot of these businesses, including market concentration risk and supply chain weaknesses. So again, if businesses are looking to diversify this, they can also look into M&A. On the other hand, you've mentioned those with sufficient cash and strong balance sheet may be looking at opportunities for well-priced acquisitions. So we've spoken to some family-owned corporations and they still remain open to acquiring. These businesses are looking to turn the crisis into opportunities. So those with strong balance sheets and have access to credit facilities will be looking for reasonably valued businesses that are aligned, of course, to their growth strategies. And there could be opportunities to invest or even acquire businesses caught in this crisis. They could be fundamentally good businesses that are only temporarily suffering at this time because of the extreme situation that we are in. But these are good targets for those looking for opportunistic activity. And so for these reasons, I think we will continue to see an increase in the number of deals towards the end of the year and definitely towards next year. And of course,
Yes, I just wanted to jump in because you had mentioned that there are still a lot of companies with cash sitting there, despite the fact that a lot have been refinancing, a lot have been tapping the debt markets now with interest rates at record lows. Do you feel that there's enough liquidity in the market, given, of course, the monetary policy of easing by the central bank? They've been quick to say that there's a lag before all of this liquidity will be tapped. Do you have reason to believe that this liquidity will enter the system and will be used, as you mentioned, for more inorganic acquisitions rather than organic growth?
Yes. So if you look at the financial statements of the banking sector, you will actually see that there's enough liquidity, except that, of course, given the uncertainties, the banks and other financial institutions are now more careful and they scrutinize each and every financing opportunity. And so while there is much liquidity out there, there might be constraints in terms of actually getting financing because banks and other financial institutions are also becoming more conservative. And yes, while interest rates are low because of the bayanihan and other stimulus initiatives of the government, but these interest rates are not actually passed on to borrowers because banks also have to price the additional risks that this pandemic is bringing. So the uncertainties that we are facing would have to be priced into those funding facilities as well.
Okay, so still a lot of risks there in terms of tapping the actual liquidity that is present in the banks. Ma'am, you mentioned that there are certain sectors that might be, let's say, undervalued right now and that investors are looking at. What are the sectors that are seeing the most action here? You did mention that there are some of the ones that are severely battered, but those also entail a lot of risk. If you talk about tourism, related or airlines, for example, is there a lot of high risk interest during this period, or are investors still looking at the ones that will ride out this pandemic, the more defensive plays?
Yeah, so again, if we look at what's happening in the last 18 months, we'll see that there's a lot of movement in the energy and utility sector. So it was the most active sector in the last 18 months with about 9 deals announced involving that sector. And we also saw some announced deals in the consumer space, transport, and logistics and financial services. So what do we see here? I think if we're talking about energy and utilities, we see that these investors are actually looking at more stable and defensive plays rather than the higher risk and those significantly impacted by COVID. And in the coming months, I believe that the same sectors will remain active. In addition, we'll probably see some deals in healthcare. You've mentioned about telecommunications. Certainly, telecommunications is one of the winners in this pandemic. If we look at PLDT alone, I believe the market capitalization of PLDT increased by more than 70 billion. And that's because, we find ourselves more dependent on broadband and mobile data these days, and the work from home situation, the online learning. and the online shopping have all accelerated the need for connectivity. And certainly communications will come out as a winner, as one of the winners of this pandemic.
Okay, ma'am, just a question on whether there's already from offshore interest into going back to emerging markets after we've seen a huge flock towards safe havens. I had just reported earlier on our net foreign outflows still, on a 10th straight month of an outflow. Is the Philippine market still attractive for deals right now, also as you compare it to other ASEAN regions?
Yeah, so the Philippines indeed has a sound economic fundamentals, and pre-COVID, it was one of the fastest growing economy with uninterrupted growth for 21 years. COVID has certainly disrupted that growth trajectory, but Philippines remain to be an attractive market. And we continue, of course, to have huge domestic consumption. And doing a deal here is still relatively easier than in other ASEAN countries. We speak English, and all legal documentations are also in English, so that facilitates cross-border deals. Of course, the government has been very vocal, in its commitment to continue to pour in money into infrastructure development, and that will help in the recovery of the country post-COVID. Recently, we also did a survey of our Japanese clients and friends, and I've asked them to rank the different markets in terms of attractiveness as an investment destination. They actually ranked the Philippines number 2, just behind Vietnam. So what does this tell us? Yes, foreign investors are probably worried about regulatory and political risks, and that's coupled with all the uncertainties that this pandemic is bringing. But those seasoned, sophisticated, and experienced investors who have done business and who are familiar in the Philippines and the emerging markets already understand how businesses are done here and will be more comfortable investing, of course, on the right opportunities in the country.
Okay, so despite some regulatory risks and political risks, they're actually familiar with this market even pre-COVID. Ma'am, before I let you go, just a quick question on valuation. You've seen the stock markets fluctuating. It's very difficult even for analysts to price based on fundamentals. Everything is sentiment driven. How does this affect the pricing and valuation of companies when you talk about M&A? Are there good deals to be made right now? Are people pricing at a discount?
Yeah, valuation has indeed become more challenging these days, and there is still so much uncertainty as we are just learning to understand the impact of COVID-19 on the different businesses. Ideally, the impact should be modeled in the cash flows. Are we looking at lower sales, higher costs, new opportunities? But absent of a good grasp of the impact on the cash flows, valuers often resort to simply adding a risk premium on the discount rate. However way it's done, uncertainty should be priced in the transaction value. However, this does not necessarily mean that valuations should suffer. The impact of COVID-19 can be different from one industry to the other, and even for businesses in the same industry, the valuation could be different. So one has to really consider the long-term business potential of the target alongside the short-term to medium-term impact of the pandemic. And if we look at the movement of market capitalization of companies in various sectors in the Philippine Stock Exchange, we will find that certain sectors are much more negatively impacted. So these include the energy sector, particularly downstream oil and gas, those in discretionary retail and consumer, and even financial services. So we've mentioned some winners earlier, and you'll see here a significant increase in the market capitalization of telecommunications. So that includes Globe and PLDT, of course. And healthcare is also doing okay. But investing in the stock market is slightly different than doing an M&A deal. If valuation is a problem because of uncertainties, the parties can actually consider shifting a portion of that purchase price to earn out instead. This will give the buyer more comfort that he is not overpaying at the onset. And at the same time, this will allow the seller to claw back the upside if the markets recover better than anticipated.
Absolutely. And there are, of course, the synergies that still also need to be priced in whenever you're making these deals. Thank you so much. It was really interesting insights. That was, of course, Mary Jade ROXAS-DIVINAGRACIA, Managing Partner at PricewaterhouseCoopers. Thank you, ma'am.
Thank you so much, Danny.
And that's a look into the business news today, August 31, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danny Laurel, and we are One News.